Hey TSW Forex, this is a review of the EURUSD trade that was taken this week, and we always start on the weekly time frame as usual, and we can see that price was on support here from in March, and this was the lowest for this year. We saw that price found support, and on the weekly time frame we had some massive movement up and a slight consolidation. And remember, when you see consolidation, it's a chance for entry, some form of movement that is anticipating for the continuation or the reversal. So whenever you see the market ranging, there's an opportunity coming brewing. And as we can see on the daily time frame here, that the price was in a wedge, pennant structure. So this pennant that we're seeing, or this triangle structure, we had one touch here on the support level, one more touch on the support level here, and a third touch on the support level. And of course, in our type of trading, we use the threes. You know that the Fibonacci numbers are 0, 1, 1, 2, 3, 5. So the threes and fives are very important to us at TSW Forex, as we can see that the market really does respect these numbers whenever it comes to pattern structure or whatever it may be. We can always see that third touches and are always being seen. So we see on the 4-hour time frame here that price hit that support level, right? You see that price hit that support level, and after hitting that support level, we can see that price started to move to the resistance level, retrace, broke it, retested it here. Whenever resistance is broken, it becomes support. After that massive move up, we saw that price was range, and again, as we say, whenever the price is moving in some form of range, a pattern is being formed. And if a pattern is being formed, it is an opportunity to buy, so or sell, depending on the type of market that we are in. In this case, if it's a bullish move up and you're seeing a falling wedge as you're seeing here, we can easily tell that it's a buy opportunity. It's a continuation that we're looking at. So simply, we had that falling wedge structure, and of course this is, we'll taking that trade off the third touch, right, with stop loss below. And of course, if you were to look at this structure, right, where would you put your take profit? The take profit will naturally be at the previous high, which is here, because as we can see is that normally what the market does is if it finds a new low or finds a new high, usually it will naturally try to retest this high. So it went off that resistance level after breaking it, so the break and retest of that resistance level, and then we saw that this major level here, that we see the spike, there was a spike that happened in March right here. This is a confirmation of the trend reversal, because if this high is broken, clearly we're seeing that new highs are going to be created. So that's an uptrend. That's that trend reversal. So it's now confirmed. And looking at the 4-hour time frame, we can see that this candle was a very bullish movement. It had a very strong bullish movement through that resistance level. So that's very good sign. After coming up to these levels, we can see that price started to lose momentum. So the push slightly getting weaker. Then we are seeing a range again. And what do we say happen when we are seeing range? Whenever you see the market ranging, it's forming a pattern. If it's forming a pattern, then it's looking for entry or continuation. Going on the 1-hour time frame, we can see that price came down from this resistance level after touching the support level. So I'm gonna fix this up so this can see with more clarity. Right, I'm gonna adjust this support line because it's not accurately adjusted. So I'm gonna put the support line on the second touch here. So we have one touch, two touch, and we're gonna use this as a reference point for our entry, right? So we have one touch here, two touch, and we're looking for the third touch. All right, so what happens on the third touch, as we said before, once they have third touch and support or resistance, you're looking to move in the opposite direction. So if it's at resistance, we sell, and if it's at support, we buy. So we see that price came down to this level, and there was a support, minor support level here. I saw a price move off here, but and again, I'm not looking to buy here. Why? Because I already know that this gap here between this support line and the major time frame structure is usually respected. So I wouldn't enter here to go along, because obviously we can see that price respected this previous resistance level and came back to the major support structure. This is why we use the higher time frame, so that we can see the true nature of the market. All right, so on the lower time frame, we can see there was some form of consolidation taking place here. And what do we say about the consolidation pattern, right? So we go down to the 15-minute and we can see that there was a falling wedge structure there. Falling wedge, we're looking for that third touch here, and that third touch is basically in line with the support structure of the higher time frame. So that higher time frame touch was what we took the long off. So we got the long off that structure, took the long off that level, right? And where would we look for or take profit? So there are several ways I can trade this. One, you move to the next major resistance level, which is here, right? So this is the first take profit that we took, the first major take profit. Another way you can do it, let's put it on the 1 hour time frame for more clarity. So on the 1 hour time frame, another way you can do it is a fib from the previous move down to either the 50% or the 61.8% retracement. So if we were to draw this fib right here, and we can see that it hit the 51%, the 50% retracement here, and then started to reject that level. So the 50% retracement or the 61.8% retracement can be your take profit level. But just to be sure, you know that the first level of resistance would have been this major resistance here. So that was one way that you could have traded. Now we're looking at this level here, the previous high, because as we said, the nature of the market is when a new high or a new low is formed, it's to retest that structure or previous price point. So this high, if we were to use that horizontal array tool and put it right on top of it, there you go. This key level here is the next resistance level that we're looking to take this trade. So we would have moved that right just a few pips below, like 1 or 2 pips below, just for, there we go. And then so we are looking for this level now for the next take profit. Another way we can look at this as the structure is evolving is the pattern may be changing. So it's not necessary that this pattern has to be the one that is holding up. So we can have that being the first touch, this can be the second touch, and is a possibility of seeing price rejecting this level, coming down to this support one more time for a long, or it can be continuation from where it is for a long. So this is the USD EURUSD trade review, and I hope that you guys have a great trading week coming up. That's it. See you in the next video.